Oh man, are we ready to get this thing going or what? Happy Sunday once again to all of you, and thanks for coming on over and hanging out and popping in for a little bit. So, as always, we want to know what you're buying. You can share why you're buying it. I love the ideas. Had a very nice conversation today with Ryan Williams. Oh, hold on. Hey, the beauty of going live, I did not mute myself. And hey, yes, this is beginner stuff, but you know what? I got fantasy football and football on the brain today. It's been a hell of a day. Playoffs going on. Not going to spend much more time on that, but there's a ton of news that we're going to get to, right? News you can use. So, hey, again, I want to thank you for coming over and hanging out a little bit. And do you like this shirt? Look at this. It's a Wyoming Cowboys / Buffalo Bills Josh Allen shirt. My mother lives in Laramie, Wyoming, and worked at the University of Wyoming, UW as they called it, or as they call it, I guess, for 19 years. So while Josh Allen was there, fun times. Good to know. What does that have to do with you and investing? Not a gosh dang thing, but whatever. So we did have an intro song, Michael. By the way, Alex Mack, if you're listening, he says he listens to the replays and wants me to read the comments on the screen, which I hadn't been doing. So Michael wants us to have an intro song when we does the live stream, and I did it. But you know what? Pat, I did see your email and I haven't gotten to it yet. You did ask a question, so we'll get to that. I didn't do too much buying. I bought another share of Agree Realty. We received dividends from Agree Realty, and I 61 some dollars. I don't know. I could pull up the newsletter, put that back into another share of Agree Realty. So that dividend covered over 90% of the cost of a new share. And one more share of SCHY, the Schwab International Dividend ETF. It's like the international version of SCHY, and I bought another one of those in the Roth. Michael's buys this week, depending on market, is thanks. You got me, man. I don't know CHH, EOG, ticker EOG is Enron Oil and Gas, and Best Buy, or add in NVIDIA for 2 shares. That's an interesting one. A lot of people think NVIDIA is undervalued. I tweeted out something on, I guess I can't say that. I flower powered something out, and it was 2 charts side by side. Maybe instead of telling you, I can show you. I think Ryan Williams does this. He'll bring stuff up, right? He'll have a thought and he will say, hey, this is YouTube where we should show you and not tell you something. And here it is. I have my post up, and I will bring you over to Blossom, where, by the way, I share my portfolio, the Portfolio Leo, for those of you that remember. And we are almost there. Share screen. And here it is. This is my Blossom. This is what I posted on Blossom. Take a gander. I said, and you can play along at home too with this, that these are the simple 5-year price charts of NVIDIA and TJX, 2 completely different companies. So which one do you think was, there it goes. Which one of these do you think was which? I think it's pretty funny because they're completely different, and few people took this the wrong way. This is what I wanted. I wish I could set that to just do that all the time. So without further ado, chart A was NVIDIA and B is TJX, which is pretty crazy. Some people thought I was recommending TJX over NVIDIA. I am not. The point was TJX is thought of as a boring ass retail business, with NVIDIA, the high flying hot tech stock, the name that the world knows and loves and wants, can't get enough of. But I thought that was pretty crazy how TJX has just relentlessly marched up and to the right. So that was a fun one to flower power blossom out. And Michael, yeah, we were talking about NVIDIA. So A lot of people think Nvidia, I think it has a PE of 24-ish. Probably a good time to pay a fair price, but again, I think it was priced for perfection, but I don't know if it is anymore. Matt, Matt the cat, I am doing well. Oh, really, Dresh? Thank you, Michael. I know some people, I get every time I put out a newsletter, I get unsubscribes, but you know, I miss writing and I don't know where to share that. I want to get back to writing my thoughts because if for any of you should try it, even if you pull up a blank spreadsheet, if you want to learn about something, imagine that you were going to be telling somebody about it and it really forces you to think about, and if you write something you want to make sure it's right. Like it's almost like in the Thinking in Bets book where Annie Duke would say, if somebody makes a statement to you, if you say want to bet, yes, you sound a little bit like a jerk, but the point is that people, it really makes you think, how confident are you to bet money on the statement you just made? Have you verified the source where you heard it from? Do you know for a fact that it is a fact? And I think that's a kind of cool, interesting thing. Got out of Nvidia after the stock split. Hey, Josh, that's yeah, if that's you do you, man. But can't lie, I thought about buying it, and I didn't buy it initially because it didn't have a dividend. It didn't pay a dividend, or no, the dividend was too small. Excuse me, the dividend was too small, so I kind of didn't want to make that mistake with one. I just started buying Kinsale Capital. Oh, Dresh, cool, man. I just saw that. When did your dad go to UW? Must have been a while ago, I'm guessing. I don't know. Josh, thanks for yeah, it's not for everybody. And I know there's a few ways people come in and they get it, but I figured that if I share a Seeking Alpha article, that it can maybe be more benefit because somebody's supposedly doing a lot of research, like today's with Leo Nellison. Actually, why don't I share that real quick? Leo Nellison has some interesting stuff, and he put out an article about the 5 dividend stocks, stocks, the 5 dividend stacks that he would trust, the 5 dividend stocks he'd trust with everything he owns. That's a pretty bold statement. I liked it. I'm going to have to remember that for future video. I'll phrase it differently, but we'll keep it similar. But yeah, in case you didn't get the newsletter, it was Texas Pacific Land, ticker TPL, GE Aerospace, ticker GE, CME Group. I think that's Chicago Mercantile Exchange. Kevin Burgess talked about that, ticker CME. Agree Realty, one of my favorites, ADC, and Antero Midstream, ticker AM. So if any of you are looking for names to look into that somebody has super duper high conviction on, those are 5 names. And CME Group has been on my watch list, but not so much GE Aerospace as of late. Boaz. Netflix buying Warner. Well, it's turning into a bit of a fight, isn't it, with Paramount? I couldn't think of them. Paramount's just kind of going all in. And that's, you want a bidding war. So great for Warner Brothers stock. How many of you have still held Warner Brothers stock from the AT&T split or spinoff? I didn't. What happened, Matt, with the John Cena? Did he retire? What happened with that? I know he was on Joe Rogan. I didn't listen to it. My wife told me about it, but yeah, Steve, you know what? Mr. Steve, let's look at AM on SST. So we'll see what they got going on there. But I think it's interesting. Netflix will be fine without Warner Brothers Discovery, but I think that Paramount desperately needs Warner Brothers Discovery and those assets. But I think Netflix will be just fine. And yeah, I think it's what do you guys think? Not just all what I think. I think the fear is that it could be overpay. They could overpay for it, right? And it's not going to be as accretive. But I think I think it would be a. Now I do know that I think they were getting a spinning off the Discovery. They had two names, Discovery Assets. They would be getting 5 or 10 billion for that, something like that. I don't know if that's right, but anyway, it would look at a little bit more more digestible than what they're paying a whole heck of a lot of money. So yeah, you guys, I want to hear your thoughts. Tux Cat, ¿Qué pasó, mijo? What's up, my son? Or your cat? ¿Qué pasó, mi gato? What's up, my cat? No sé la palabra para tuxedo. I don't know the word for tuxedo. So oh, that's funny. Why do you think my dad is old? I know I shouldn't have said that. Dude, you could have been 19 and your dad would probably have been younger than me. I'm in this mindset when I hear about somebody's dad, I just think of an old person. Sometimes I forget my age. We were at my daughter's flag football game this summer, and there was some kids that my kids know, their classmates, and this one girl introduced herself to my wife and myself. She's like, "Hello, I'm Mel." And I was like, "Hey, I'm Russ. How's it going?" And my wife goes, "Or Mr. Knopf." I was like, "Oh, I don't think of those things. I forget how old I am, you know?" So apparently there is a proper etiquette around high schoolers that know your kids. I don't know. John Cena, he's my age. Speaking of old, yeah, he retired. Opinion of FDP, Fresh Del Monte food products. You know what, Jack? I've never looked into that. I love it. I love it. I love it. And I'm going to write your name so I can remember that. FDP. I did look into Canadian CNI, Canadian National Railway, right? Is it CN? Looked interesting, but the debt revenue looks like it's tapered off. Has anyone taken that train from Toronto to Vancouver? I think it's a 4-day trip. I saw a YouTube video pop up on it. Ray Lamb. I am not buying Costco yet, but it is in a straight, not downtrend. I wanted to say it is in a strong downtrend. So I'm liking it, and I am sticking to my guns to get it a lot closer to $800. And that's, I don't know. That's what Warren Buffett talks about. You don't have to swing at every pitch. You can stand at the plate for as long as you need. There's no called strikes or balls, right? JJ investing. Oh, is PG a buy right now? I think it is. My only concern, and we can look at PG, right? It's a very strong company, but I think it is so big and so mature. I don't know where the growth is going to come from. But yeah, we'll look and see what their revenue's doing. Because remember, that's something I've learned is that if revenue is flat or declining, it's going to be really hard for a company to grow the business and grow the dividend when revenue is stagnant. So you want a lot of things, but that's one of the simple things you can look at is revenue that's consistently going up and to the right. Oh, Paramount does have the UFC now. Do they really? Oh, no, they don't. That is the company they merged, TKO. They don't pay a dividend yet, but TKO Holdings was WWE and the UFC, right? Boaz, you sold your waste management and moved into Netflix, so you might consolidate more if price drops. Yeah. Again, two different companies, but you also have to wonder, has Netflix kind of topped out for now? Is that why they're trying to buy Warner Brothers Discovery so they can charge more money to say, look, we have a bigger content library. And that's one of the rubs, I think, with companies that shoot up this far this fast. But and yeah, I had Netflix on my watch list, but I think it just feels still a lot pricey for where it's at. Just my opinion. What do I know? I can't. Hey, I'm the guy that was telling people that Costco was overvalued at $500 a share, and now I'm waiting for it to get under 800. But that's one of the things Ryan and I talked about. We answered some questions, so that video will come out in a few days. But oh, dude, nice fellow blue collar worker here. What do you do? Let me know what you do, Jace. Just grabbed a few Vici shares this past week. Yeah, Vici, I love it. I want to buy more, but it's inside of my IRA, which is a self-directed IRA. It's a locked account, meaning that we moved $30,000 from our 401k in March of 2020, and we rolled that into the self-directed IRA, which we opened up. Why? Well, you can do a lot more. You can sell covered calls. You can buy penny stocks. You can do all kinds of nutty things in it that, losing your money or not making as much than just buying a boring old index fund. But I digress from that. We have Vici there, and I've been loving it under 28, but I don't have any more money, and we haven't put any more money in. It's right around $60,000 now. So, I've made a lot of mistakes in that, but still we've doubled our money in 5 years. So there's something to be said for that. But Vici, I guess the quick thought, my friend, is that you're not worried about foot traffic. You're worried about rent checks, and the properties that Vici owns, the tenants have to pay them rent. And that's going to be one of the top things that they make sure that they do is get those rent checks to Vici. But Vegas is a one of one. I can't think of any other city on the planet that is like it, just like New York and London are comparable. There are areas in the Mediterranean that could be comparable to Los Angeles. You can go down the list to Miami, things of that nature. Miami might be comparable to Dubai. Who knows? You can make those parallels, but with Las Vegas, there's no other city in the world that's like it. It is truly a one of one. And in that one of one, the Las Vegas Strip is the place that you want to be. The prime real estate, it's almost like beachfront property. So that's where Vici's bread and butter is, even though they've been diversifying away from it. I think when they came out of the Caesars bankruptcy, 100% of their annualized base rent at the beginning in 2018 for Vici was Caesars Entertainment, but they have diversified away. I think they're down to 45% now, which is just a good thing. You don't want to have all your eggs in one basket. So they're kind of trying to go into experiential, into family like Bolero. They have a whole slew of Boleros, the bowling alleys. But man, I think they're going to be just fine. And I think a lot of people might be scared off by hearing that Vegas foot traffic is down. The casinos, if their sales are dropping, they're going to do things to get more people to come in and increase the volume. It's just the way that it works. There's cycles that happen. And I think we're in a cycle where foot traffic is down, but we'll see. And it's why 2% of my investment portfolio, it's like 2.4% is Vici properties. If it went away tomorrow, it would suck, but it won't financially cripple us. Josh, you started a position in FTP recently. I don't know that one off the top of my head. Jack we're going to look at it though, Josh. We're ready too far. We'll do the news and then we'll look at that. But let me get caught up here. Oh, Jack, you are Canadian. Asked about CNI. Yeah, it looks solid. But again, I think I would be more apt to want to buy CNI if I was living on a fixed income and trying to protect my wealth, where now I'm still trying to grow it, but I want to grow it, I don't know, maybe a little more conservatively than going after super high returns. Look at this guy. I'm not sure how I feel about that. You're going to be a dad like me. Well, some might say I'm the best dad in the world. I haven't seen any evidence to the contrary. So just saying. If you're a wrestling fan or UFC fan, I think TKO might be great. I did hear TKO, the CEOs, there's co-CEOs, right? I think the one is Ari Emanuel. They were on with Jim Cramer. Hey, think what you want about Jim Cramer, but what I like about his Mad Money, yes, at times there's a lot of bells and whistles and it gets a little crazy, but I really enjoyed that every time, every episode, he talks to one or two CEOs, and it's mind-opening to hear new companies and what they do, but always take it with a grain of salt, because remember, CEOs almost always try to put positive spins on their company, and I think there's only a few. Bringing it back to Vici and ADC, Joey agree with ADC, and at Petoniak, as I was talking about this with the Dividend Collection Agency, Travis, who we've talked to, Seeking Alpha writer, we both agree that those are two CEOs that are pretty straight shooters and tell things like they are. So nice. You are in HVAC. Have you ever looked at Watsco? Watsco. My guy Ryan Williams is in WSCO, I think. Watsco. I don't disagree with PG growth being engineered. Yeah, share buybacks. And that's where that can help when you look at share count declining. But again, revenue, it's really hard over a long enough period of time to mess around with revenue. And if revenue is not growing, if it's flattened out, it's going to be hard to grow the company from there. Boaz said, time will tell, but let's be honest. The question is, where are people going to watch films people pirated on? Yeah, I don't know. I know they're trying to get away with it, but we had some experience in one of the jailbroken box and whatever. Anyway, some years ago, we had a friend say, hey, you can get the whole world for, you do this and that, and then you go on this site and you download this and you do. And after a while, I just remember telling my wife, it's just so much easier to just buy from Netflix. Look at that. Matt, do they pay the dividend, or was that a special? Because I think one time I looked in it that they didn't pay. I thought it was just a special dividend they paid. So I don't know if they started paying a dividend. Gaunt. There is Macau. It's like Vegas. Yes, I thought of Macau. I've never been to Macau. But how many people say Macau, baby? Macau, baby? No, it's always Vegas, baby. But I suppose if you're on that side of the world, and from what I've heard, things I've read, yes, it is similar, but it's not. I don't know. That doesn't make sense. Oh, John, Harrow Health are the radio stations. Well, if you're playing along at home, I sold out of Nexstar Media. And of course, after I did, it just kept going up. I developed my conviction that it is a melting ice cube slowly. Harrow Health, just been fantastic, firing on all cylinders, growing. I think that they are probably going to keep going up and to the right. So Harrow is around $50 a share now. It's growing up nicely. Okay. Last question before we look at the news here. Eddie, you said Ryan is on a conservative scale. He thinks Ryan is a 4. Where would I consider myself on that? More than that, because I've dabbled with covered calls, and there he is. He just pops in. I've dabbled with covered calls. So yeah, I don't want to spill too much, but we talk about some of these things on the video that will come out. I guess I would say more of like a 6, 5.7259 put it there. Okay. And with that, I've held you guys long enough. We want to do the news. There's a lot of news. I'm going to have to go so freaking quick here. Yeah, there's just, it's a lot. And you can take a screenshot or pause it if you want to see something a little more in detail. Where am I at? Here I am. All right. Here we go. Starting with, right? Yeah, the 8th. Office REITs, not interested. SL Green, they were downgraded to 30 unsafe. Let's see what we got here. Eli Lilly raised their dividend 15%. They have a new drug. Did you guys hear about that? Where people lost a whole heck of a lot of weight and their knee joints improved. Crazy stuff like that. But wow, look at that. Eli Lilly over $1,000 a share. It's gone ballistic. So they raised their dividend 15%. Amgen, biotech company, 5.9% dividend raise, and they toward the high end of reasonably valued. Realty income, it's just another quarter, another realty income raise, 0.2%. That's their 133rd raise since 1994. And they look like they could be a shade undervalued, according to good old Simply Safe. MasterCard, I know some of you like MasterCard, reasonably valued, raised that dividend 14%. Congrats to MasterCard. Toro, ticker TTC. If any of you grew up in the Chicago area watching the Cubs, you definitely remember seeing the Toro sign around Wrigley. 2.11%. Yeah, it looks like it could be undervalued. So, hey, it says they have a conservative payout ratio under 40% and a strong balance sheet. Toro, small dividend raise. FSKKR Asset Management Company, they reaffirmed their dividend safety score of 25 unsafe, and they think it signals a dividend cut. But honestly, that yield at 16%, even if they cut it in 50%, right, it's still going to be an 8% yield. So Safehold's dividend remains intact with higher rates and funding pressures. I don't know Safehold, specialized REIT, and looks really undervalued. I wonder why. Getting downgraded. UPS, they reaffirmed their score of 50 borderline safe. Got a lot more to get to. Bristol Myers raised their dividend 1.6%. Token raise. You want to see more than that. Looks like that's their second token raise in a row. So they look like they could be undervalued too. Are you invested in Bristol Myers? Universal Health REIT raised their dividend, token raise 0.7%, but they do have a 7% starting yield. I've talked about this a lot. If you want to talk more when we come back from all the news and stuff, LyondellBasell, dividend downgraded to 20, very unsafe, almost a little over 12% yield. Their CEO said in his 35 years in the industry, this is the longest downturn that he's seen. I got out because of that. They're so heavily tied to a commodity. So not for me. They refreshed their outlook on Franklin, ticker BEN. And they look reasonably valued. We're getting there. I told you there was a lot. Stryker raised their dividend 4.8%. I love that name, Stryker. Sounds like it should be a military contractor, not a surgical equipment company. Novo got a dividend safety downgrade to 80. But I think the dividend talk guys are still liking Novo Nordisk. There we go. Zoetis, talked about this with Ryan, raised that dividend 6%, which is their 12th straight year of dividend growth. And you know what? This is one where I've talked about with Ryan. I'm looking at the fundamentals, and you can't control the short-term outlook. Their growth is slowed in a few segments a little bit, but I think people were just excited for a much faster growth, and that's what you get. You get a valuation reset, which is what this is. So I'm not selling unless I'm forced to, but nice to see a 6% raise. I was hoping it was a little more, but I understand it. All right. We're there yet? Broadcom raised the dividend 10%. That's their 15th consecutive year. I know they got whacked too. Edison, ticker EIX, 6% dividend raise. California Electric Utility Company. Westlake, commodity chemical, another commodity chemical company, dividend downgrade. So it's happening to a lot of them. It's those things that management doesn't control, which is again why I got out of Lyondell. And Abbott raised that dividend 7%, which is the 54th consecutive annual increase. And hey, crazy that Abbott got spun out of them and AbbVie, and AbbVie is way more valuable. Let's see if we can go through these really quick, because I really enjoy talking to you guys, and you don't need to just hear me prattling on. So here you go, Steve. Antero Midstream, ticker AM. I don't know if you get, oh no, it's a qualified dividend. And when were they established? In 2002. I like the midstreams. Looks like they cut the dividend in 2020 and it has been frozen ever since. So that's not ideal. So frozen dividend could be overvalued. Yeah, the yield's below its historical average. The forward price, the discounted cash flow is above. DCF ratio, it's spotty, or you can't, it's incomplete with Simply Safe. They're not perfect all the time. So you know what? I don't know. I think I would just stick with EPD. If I know you get a K1, but I mean, for Christ's sake, EPD is buying back shares. I don't want to look too much. I don't know. God bless Leo Nellison that he loves Antero Midstream, and it looks like they've had a nice run up, but not for me. Josh was on, Jack, Fresh Del Monte produce. Got that Fresh Del Monte produce over there. Agricultural, 3% dividend yield, unrated. Looks like they're growing the dividend fast. I was looking for the names they own. Here we go. UTC, Pink Glow. You got that Pink Glow. Del Monte, Honey Glow, Ruby Glow. What's with all the glows? Pink Glow, Honey Glow, Ruby Glow. Better Burger. Oh my God, they own a lot of stuff. Better Burger Leaf, Roma Leaf, Broccolini. Okay, they own a lot of stuff. They're based in the Cayman Islands. Okay. Fast dividend growth lately, but looks like they're getting ready to raise it again. Free cash flow payout ratio is very good, except for 2022. I don't know why their free cash flow dropped a whole bunch, but it did. This is Fresh Del Monte. And here's sales growth. This is what I don't like. And here we go. Case in point, everybody. Well, you see the sales growth there. Some years, 10% negative, positive, negative. When you have sales that were at 4.06 billion in 2015, and today they're at 4.32 billion, it's flat. They've stopped buying back shares, diluted a little bit. It's going to be really hard for the stock to grow. It's just a company that's not going to, I wouldn't expect a lot of growth. Yeah, margins are just, okay, they're paying down debt, so that's good, but not for me. I mean, I'd love to know why you guys own it, but and what we got here? Old Procter and Gamble. Yeah, they're facing it now, down to $142 a share. This is going to be a quick one. They're founded in 1837. All those names you know and love. Just what do I say? Go in your bathroom, look around. You're going to find that Procter and Gamble logo on one of these problems. And I think Ryan, they switched to Pampers or Loves, one of those two. You don't want to blow out. No, baby, blowout. 69 years of dividend growth streak. Bill and Ted would be proud. But yeah, it's just steady Eddie. It's a great company for those that are, I think, living on fixed income. And it looks like a fantastic time to buy when their price to earnings on the forward price to earnings is 20.2. It's historically been 23.8. That means you're paying $20.20 for every $1 of their earnings. And you're getting an almost 3% yield. So I think if this would drop really low, I don't know, into the 120s or so, I might pick it up because it's probably eventually going to go back into the 150s to 60s. Procter and Gamble is. But this is, yeah, it's just steady. We're not going to spend a lot of time here because earnings per share just constantly, because they charge more for their products to pace inflation, right? Yeah, and there's their sales. It's actually looks like it's flattened out over the last 2 years, but still, just still up and to the right. And they don't really buy back a whole lot of shares very gingerly. Yeah, great margins, great company. It's well deserving of a dividend safety score of 99, and their debt is low, and they have plenty of interest coverage ratio. If you just hopped on the chat, this is Procter and Gamble. If you don't know what interest coverage ratio is, it tells us how many dollars of operating income, or also known as EBIT, earnings before interest and taxes, does a company have to pay or cover every $1 of interest on the debt. Procter and Gamble here currently has $25.20 of operating income to easily cover every $1 of interest on the debt. And that's important because you can't default on debt. If you can't pay the interest on the debt, you're probably going to file for bankruptcy. The dividend's getting cut for sure. And that's that. So, holy cow, that was a lot. My good God. Now back to your regularly scheduled programming. And yeah, we did. I mentioned one of our friends, friend of the channel, Dividend Jace. He's in the trades, and I asked him what trade, and he said HVAC. So I mentioned you own Watsco. Yeah, Boaz, the Dividend Talk. Do you listen? That's in your neck of the woods. Do you listen to the Dividend Talk podcast? You can interact with them too. I know EDG, European Dividend Growth Investor in particular, likes Novo Nordisk, so he is buying them. But yeah, Adam, what's up, man? Nope. Dude, it's not like you're expected to be here. Like I'm going to chastise you for not. Ryan got 3. Oh, I'm sorry. William is answering. William got 3 shares of SCHD, and whatever brings SCHY up to an even number, 8 or 9 shares of SCHY. Yeah, I bought 1 more share of SCHY because I had enough cash in the Roth laying around. So they've been rocking the Pampers. Pamp it. That's like the meme, right? If any of you fine folks out there are on StockTwits and you delve into the world of some of the crypto and things like that, people will talk about Pamp it. I don't know. It's a weird gif. It looks like Kurt Russell or something. He's got these big balloon lips and he's saying pamp it. That's one of their favorite things to say with their meme stocks is to pamp them. Means go up. That's not investing. That is straight up speculating on price. Oh, Trevon, your favorite midstream is DTM, up 100% since the spinoff from DTE. Wow. No kidding, man. Nice job. I am not familiar with DTM. And let me get I like how you put the cash tag on there too. DT midstream. Okay. Wow. Yeah, it's really gone up a lot. So nicely done, man. It's at the high end of the 52-week range. Beautiful. Do they pay a K1 though? Or pay a K1? No, that's a qualified dividend. Very nice. Nice to see, buddy. Ryan, you're too kind. You are too kind. And hey, people will like very stoic, right? If they like it, they'll like it. So what you guys want to look up anything else? I didn't look at the Seeking Alpha to look at AM and FTP to see what those guys get. Yeah, for sure, man. And it's it was an hour long. We can chat with the best of them, buddy. Tuxcat thinks Mondelez is cheap. Company authorized a 25 billion share buyback. The only thing with that is I love companies, and this is what I am going to be looking for with companies like Kinsale that had a big drop, and who recently, not Vici. Oh, another one of my companies. Oh, Zoetis. That's who I was telling Ryan that Larry Longballs. I was telling Ryan that you guys are great. I was telling Ryan how now that just, dude, your name just completely threw me off, Larry Longballs 78. Oh, Zoetis. That's what it was. So I got this picture in my head now. It's not appropriate, but Zoetis with this huge drop. I am expecting them to do a lot more share buybacks when the price is really low, because that can be very beneficial for the shareholders. So we will see. We will see if they do that. I want to look up just to get. Let's see. I want to share my screen with you. Come on, come on, buddy. You can do it. Think real hard. They're like, I keep clicking on the wrong things. People are like, come on, buddy. Think with the smart part of your brain. Get it done. Right? Get her done with the smart part of your brain. Here we go. He could do it. I told you I could do it. I told you. All right, what am I looking up now? Now I got to remember what I'm looking up for you guys just to see what the quant said on those. I wanted to check that. So first, Antero midstream, the quant rates at a hold. Okay, fair enough. Couple analysts down here rated a buy, strong buy, hold, buy, not buy, but buy and buy. Then we got FTP, and then I'm going to see what they say about Mondelez or Les. A hold, strong buy from Wall Street. Don't you gotta love it? Fresh Del Monte going bananas over this stock. A strong dividend opportunity. Albert Anthony, you know he's been sitting on that one for a long time to go bananas over this stock. So I don't know. It's all right, buddy. He's my cat's. And then we got PG, and then I want to do. There we go. Actually, got a hold, but Hawk Invest Dividend King is on sale now. Cash cow, that's still a sell. I don't know. Why are you selling a cash cow? I guess you'd have to read William Davis. But anyway, so we got the whole gamut from strong buy to sell to buy to hold, buy and hold. And yeah, what are you guys doing with PG and MDLZ, which I believe owns Sour Patch Kids? Yeah. Has I zoomed into my hold. So another hold, not a lot of buys. Rare opportunity to buy this snack powerhouse below fair value. Interesting thing with this, with Seeking Alpha, is you can go to where they show the quant ranking, the consumer staples, they'll show the industry. But overall, out of the whole universe of stocks, it's 3004, but it's 105 out of 176 in the sector. But if you go to the industry, which is packaged foods and meats, y'all click on it. The quant thinks that Mission Produce is the best buy right there. Not a strong buy, followed up by Danone, Fresh Pet, Tyson Foods, and B&G Foods. Mama's Creations. Crazy. Never heard of Mama's Creations. But then if we just want to go to check out overall out of every stock that the quant, here you go. These aren't necessary. And you can do by dividend, but I don't know if this is ideas for you guys, but you got Micron up there is number 2. Yeah, 4.99 is the highest that the quant gives. So there's a few up there, and it takes into momentum and valuation and all kinds of different things up there. So there you go. If you want Lumentum Holdings, I don't know. Maybe you put some money into it and see what happens. So let's see where you guys at. Ryan or Adam, you're sticking with Conagra, right? And Target. I just can't get around Target, man. It's almost comical how every quarter they blame all these things that they blame, and then Walmart comes out. Walmart always seems to come out after Target. And it's the funniest thing because it's like Target says, and we've got inflation and weak consumer, they're spending less, and supply chain problems, and they have all these things, but but then Walmart comes out like a week later and they're like, nope, we don't really have any problems, and we're growing and raising guidance. So it's like, what's going on, Target? Come on. But they did. Brian Nickel, their CEO has stepped down or retiring or about to. I don't remember, but he is going to stay on as chairman of the board, which seems like a little bit of a conflict of interest. But you know what? I hope I'm wrong. I don't know that Target's going to ever go away. So why? Oh boy, how much time do you have, Coop, on why they don't pay a dividend? I can you give me a quote on that? Because I don't think that Buffett says great companies pay dividends. I can tell you I've done a lot of studying on Buffett, and Berkshire did pay a dividend once in the 1960s, and he said it was when he was in the bathroom, meaning he made a mistake by doing that. It was a 10-cent a share dividend, I believe. But he loves companies that pay dividend, but he would much prefer companies that he can understand that grow very quickly. And the whole point being, and he did this in one of his annual letters, I don't remember which one, but I've done some content on it, where he thinks that, no, he doesn't think, he shows the example where if you were you had two companies, or if you and I, this is jumbled up. If we own a company, and company A and company B, hypothetically, and we were to take money out of company A as a dividend at whatever percent and pay it to ourselves, and then there was company B that didn't pay a dividend, and that money went back into the business to grow it faster, but when we needed cash, we took out the same amount by selling shares. So it was a dividend versus share sell-off example, right? That he did. And it turns out that the company that was reinvesting 100% of the retained earnings into growing the company to make it bigger, the share price grew bigger than the company that was not reinvesting all of it to pay a dividend. So that company didn't grow as fast. And the one thing he had said is that when a company pays a dividend, it's taxed twice. It's not tax advantage. It's not optimal because it's taxed at the corporate level, and then it's taxed. You have to pay taxes on that dividend when it comes to you. So that's so Berkshire, for him, he would say that he thinks that they can turn $1 of retained earnings into more than $1 of net present value, much better than you, the shareholder, can. So if they reinvest that back into the business to do a myriad of things that they do with that dollar that stays in Berkshire, they will grow it much more and thereby grow the share price a lot more. But he said, if we can't find anything intelligent to do with those retained earnings, then we'll start paying a dividend at that time. But Warren's got a few more weeks left on the job, and Greg Abel, new CEO, will he? News this week, Todd Combs is leaving for JPM. So that's one of Buffett's lieutenants, and he's out after 15 years. So that's going to be interesting to see. The Japanese yen is falling again. I don't know. I think it's going to be a blip in the long term. 10 years from now, don't know what that'll do, if anything. So, God bless him. I hope it turns out well for everybody. Oh, race. You're thinking about buying, is that for Ferrari? I think is what my guy says. Thinking about buying Ferrari. We can look it up. Let's look up race because I want to. We'll see what the quant says on that. And then I did see one more. We'll squeeze it in. Is Google overvalued? Well, I sure wish I was buying Google. You hear this a lot from me. It's resulting. It's looking back, saying knowing the outcome, but I do remember hearing the deep end with Ryan and Ari when Ari was buying it in the 170s, I think. And I remember thinking maybe I could start picking up some. But honestly, I said, I own enough of it in the S&P 500. I have a very large allocation to the Mag 7. And you know what? I didn't. What are you going to do? And then it just kept running up and up and up. But that's one of those stocks that you should have, or I missed. Actually, we study billionaires. I should have shared this in the newsletter. They had a podcast where they interviewed with Stig Brodersen, and I really should have shared that one. I don't know why I didn't, but they talked about using products that go in your mouth or in your hand type of thing. Sounds weird, but meaning that I used Google a lot for a long time. And it's funny because Stig Brodersen, one of the founders of We Study Billionaires, said how back in the day, he put a lot of money into a company that will say made components for oil drilling rigs in the Baltic. And he said, I know nothing about that. I don't know anything about that, but I do know about Costco, Uber, Google, Apple. And it just seems so simple to want to do that. But yeah, that's interesting. That's the thing about Jim Cramer. People say that, but he hasn't been wrong on everything. And he's kind of like here, he says he gives a lot of advice and a lot of opinions. But I mean, I know I enjoy hearing him talk to CEOs. I like getting that insight, new companies. And hey, I will say, remember the inverse Cramer ETF? It's gone. And Jim Cramer's still there. So how about that? Loused. I remember you, man. It's been a minute. We had a little of an interesting exchange. I don't remember what it was over. Do you? Was it over? I think it was over something. And were you the one that said, I think you were the one that said, when am I going to do a video saying that I was wrong about the GE reverse split? I think that was you. And I said, well, I'm wrong. But what I did miss in that is that they were more or less right sizing after they spun off the GE, was it Vernova? They had a couple spinoffs. So they were trying to right size the share price. I guess that's what the spinoff was about, or the reverse split. But it still stands that almost every time I've seen a reverse split, it's because a company is struggling and it's a gimmick to keep them from getting delisted on the exchange where they're trading, because they have to have a minimum price requirement. And if you don't hit that, you can be kicked off the exchange. So yeah. And I do believe, though, I did say, I hope it works out for all the people that stay invested in GE, but that one, it's done extremely and incredibly well. So I think there is a bit of an asterisk with GE that it wasn't necessarily a reverse split because the stock had just been an awful business and the share price was reflecting it being an awful business. So anyway, was that you? I think was asking me if I would do when am I going to do that? I don't know. RKBL. Oh, we were going to look up race in Google. Shoot. we're running out of time. Let's do that. Here we go. We like the companies in which we have investments to pay us money they can't use efficiently in their own business. Yeah, so that right. And if he had his if okay, put it this way, if the company could efficiently use the business to grow the business faster, he would forego the dividend and rather have them do that. But if they can't use it efficiently and they pay Berkshire a dividend, Warren probably says, "Well, I can use this money more efficiently than you can then," and he'll invest it and do what he wants with it. So, but yeah, it's not a Warren isn't looking for a company that pays a dividend. It's always a byproduct of the business he understands and trying to be less dumb and not lose money, if that makes sense. Let me look those up for you guys with Race and Goog just to see what Simply not Simply Safe. Yeah, I guess we could see what Simply Safe says real quick. The voice is going, what is up? What's up with that? My God. All right, this is what I want to do. Race, which is Ferrari, right? Yeah. Pays a 0.85% dividend yield. I would not let that scare me away if you are in the wealth accumulation phase. Really quick dividend growth. What else do they own? I thought they had, yeah, they have an F1, right? So you get your dividend, or that's the amount reflected in euros. Man, really quick dividend growth since the pandemic. And it's an annual dividend, $3.14 per share. Low free cash flow payout ratio. Oh my gosh. Yeah, this is what you want to see. Free cash flow going up and to the right, except for 2020. Sales growth has been declining, but yeah, look at that. Again, companies will grow if over time their sales keep increasing and they're buying back shares. So this is really interesting. That's a nice one. So far, it looks very nice margins. Wow, they have really aggressively paid back debt and super high interest coverage ratio. Man, this one looks really, really interesting. I don't know much about it and I haven't looked into it. So thanks for sharing that. But I want to see what the quant says on Race in a couple. Here, Ferrari gets a hold and it has come down a bit from, what was that, 504 and we're at 390 now. So get a hold, a buy, and a strong buy. So that's one we would have to look into a bit more. And then the last one, let's see. Oh, you know what I'll show you as we'll end here? I will get you the quote unquote intrinsic value. Google is a hold. This is all over the place. There you go. Analysts on the left here. You got to hold, buy, strong buy, hold, buy, hold, buy. Okay. And I did want to alpha spread, you guys know. Alpha spread is, let me log in first, just because I don't need you guys to see my email addresses. All of them, I guess. Okay, here we go. So you get 3 a week. You can open up multiple email accounts, but they give you the intrinsic value, what they think it is. And Google, they give for $191.12 on the base case, and worst case, 56% undervalued. But even in their best case, where I think that they expect 10 years, I believe, of something like 5 or 10% growth, something aggressive, they still think it's overvalued. So according to this, you probably want to wait for Google to come down below, get into the 190s. Will it? I don't know. Nobody knows because nobody's seen this movie before. So that's, Lind, right? Linde. That's a company I've used in my line of work. Shout out Lind and Praxair. And yeah, Praxair is the other one. Well, my God. What is BKH? I need to know BKH at least. Black Hills. Yeah, they're a utility dividend king, right? Oh man, their share price had been going up. Yeah, I think we've looked at them before. Solid company. Yeah. Oh, Jim. Wait, what do you mean my mailbox is full? I hope you're kidding, right? Seriously, Jim. You can't do that to me. Email me if it, well, buddy, I hope you're joking around, but if my mailbox is giving you a full message, that's no bueno, and I would need to know about that. So, uh, I hope you're kidding, but did he say kidding? No, kidding. Well, it's about time for you to hit that long, dusty road, dear dividend investing viewer, because we've cut. I don't know where the time goes. This is crazy how the time just flies by. And I don't know, Jim. I guess you're going to leave me hanging. I'm going to have to just assume that you're a big old jokerson. And grinding retire. I miss you. I don't think we've talked before. You're late. You're freaking late, but you're just in time for Pee Wee because everybody, I got to go. You got to go. And I will be back here next Sunday night to do this all over again. So bring your questions. I really want to hear them. I really do appreciate you hanging out, especially if you made it to the end. And thank you. Good luck this week and good grinding. We'll talk next. We'll talk next time. So I'll see you guys later.